Have you ever been worried that you might not have enough money saved for retirement? I know I have. But we're not alone. According to a survey of consumer finances, people aged 35 to 44 have a median retirement savings of only $45,000. Now, I know some of you might be thinking, wow, I don't even have half of the median. And so, what's the point? I have a low paying job, or I just feel like I've started too late. But let me tell you, even if you're in your 40s or 50s, it's not too late to start a retirement account. So if I give you a small example using a broad market ETF called SCHB, and I'm starting today with no shares, but I invest about $7,000 annually for the next 15 years, then I'll have close to $166,000. And to me, that's a lot of money. But I think I may have found a way to almost double my returns. If you're interested, keep watching to find out more. Now, I can't tell you how many times I've heard people talk about their financial regrets. And one regret at the top of the list is always, I wish I had started my Roth IRA sooner. Others will say, I wish I had invested more in my Roth IRA. So they started early, they just didn't focus on it or put enough money when they had started. So in this video, I'll talk a little bit more about what is a Roth IRA, what is my plan for using high yield ETFs, and what are my results so far. So let's answer the question, what is a Roth IRA? Well, it's about 30 years old and it's meant to help people in lower or middle tax brackets. So if you make a certain level of income, you actually can't have a Roth IRA account unless you use something like a backdoor Roth. Now, when I took finance in school, my professor would always say Social Security is only meant to be 1/3 of what you need in retirement, which means you can't rely on only Social Security to retire comfortably. So the Roth IRA can help supplement your income in retirement. Now, some of the great things about the Roth IRA is that you have tax-free dividends and capital gains, meaning that when you withdraw money in retirement, you won't get more tax. Now, some of the limitations of a Roth IRA is you can only contribute earned income. And this earned income is taxable income within the United States. So that means you can't invest foreign earned income and you can invest taxable um, income from dividends. Even though the income dividends might be taxable, that is excluded from what you can contribute. Another limitation is a $7,000 a year. So you don't really have a lot of money that you can put into an account. But again, it's designed for people who are not in a high income tax bracket. Now, I think the Roth IRA is sort of similar to packing, but your bag or luggage is really small. Remember, you only have $7,000 you can contribute. So once you fund your Roth IRA, you can't buy everything you want. You have to be strategic in what you purchase within your Roth IRA. So for me, I chose these three funds, SCHB, XCTE, and YMAX. Now, I chose SCHB, which is from Schwab, because it's a broad market ETF and it has access to 2,500 companies. Now, if you've ever seen one of those videos about having a three-fund portfolio, they always recommend having a broad market ETF. So I chose SCHB. But you could easily replace SCHB with something like SCHG or VOO or VIG, right? Well, VIG isn't a broad market ETF, but it gives you a little bit more exposure than other regular dividend ETFs. Now I chose XCTE. It runs covered call options on or synthetic options on an index. And I think running options on an index is a little bit safer than running options on a single stock. And I have YMAX, which is from YieldMax, and it's sort of a basket of a lot of their funds. And this is sort of the heavy hitter of the portfolio. Now I'm using these three stocks sort of like how a rocket ship launches into outer space. XDTE and YMAX are my thrusters for this portfolio, which means they help boost the portfolio. But SCHB is the main attraction. It is the big ship, the core part of the account. And so once I get SCHB to a certain level, I will give up XCTE and YMAX. But that's probably not going to be for a number of years. Now, to illustrate this, XDTE distributes about 29% in sort of distributions. It's a little bit different than regular dividends for tax purposes, but people call them dividends. Okay. 59% yield for YMAX, and both XCT and YMAX are weekly payers. Now, it's not always 29% or 59%. It depends on the market, how the fund managers execute their options. So it could be less or more in certain weeks. And SCHB has a trailing 12-month yield of 1.25%, which is really not a lot, but you're not investing in a broad market ETF for its yield. You're really investing in an ETF for its growth. So I mentioned about the reduced volatility in XDTE and the potential payout for YMAX. Now, it is 59%, but on some really good weeks, it could be 70%, 80%. And for SCHB, the 5-year total return is 108%. I think that's a phenomenal return. And I think that's probably one reason why people recommend a broad market ETF over something like a BDC or a high yield ETF, because the returns are a lot higher. I mean, take for example SPYI or QQI, which pays a distribution between 11 to 15%. If you do the math and do that 5 times a year, it's not going to hit the return of 108%, unless there's some capital appreciation in those accounts that is really good for the next 5 years. It could happen. I'm not saying it's impossible, but I would rather put my money on SCHB to outperform than those other two funds. Now, for my plan for phase one, I'm still in the build income. Remember, I'm starting from scratch, zero. I don't have a lot of money I can invest. So I invest in XCTE and YMAX, and I'm dripping, which means whenever these two funds pay out, I'm using those distributions to reinvest into the fund. And my goal is to keep reinvesting until I can get a total distribution of $4,000 per year. Now, my second phase is once I've reached those goals, the goal of hitting 4,000 per year, I can invest 7,000 into SCHB. And this is going to fuel SCHB with with YMAX and XDT income. So imagine that I'm putting $7,000 annually into SCHB and $4,000 more from the distributions from YMAX and XDT. So instead of investing 7,000, I'm potentially investing 11,000 into my Roth IRA. And phase three is once it's consistent and the payouts are, paying out every month and I can drip into SCHB, then I have to be really strategic in what I buy and how I buy. Okay. Now, you can't time the market, but historically there have been some months that tend to be more down than other months, and so February, May, September, October are known as down months. So that means when SCHB takes a hit or becomes on sale, I'm going to look to buy SCHB during those months. There's also something called the weekend effect, And sometimes on Fridays when people report losses, the market is down, or for some reason on Monday, it's low because it's after the weekend. Okay. And this is not every week, but this is what has been reported. So I hope to strategically or opportunistically invest some of the distributions into SCHB during this time. And I think this is a good strategy to pair with dollar cost averaging. I think my gripe with dollar cost averaging is people who do it sort of become lazy investors. And while I think it's a good strategy, sometimes you can miss some opportunities to buy certain funds on sale. So for the main part of this video, what are my results so far? This portfolio is only a couple of months old, so it doesn't have a lot of big results, but so far I'm beating the S&P 500. I have 11.28% versus 10.6%, which is the S&P 500 benchmark. So not bad. In June, I received 4 distributions from YMAX for a total of $56.34, and that's a little bit higher than a 50% yield. XDTE, I received 4 payments for a total of $104.43, and that's about a 30% yield on my return. Now, in year one, this is my results so far. I have 100 shares of XDTE, 218 shares of YMAX, and 225 shares of SCHB. Now for XDTE, I've already achieved my goal for how many shares I want. However, for YMAX, my goal is to have 300 shares, and I'm pretty close. I think I'll hit that goal before the end of summer. And my year-end goal is to purchase or to have 500 shares of SCHB. And I think I can do it. I'm almost halfway there now. Okay, so some final thoughts. The future starts today, and I know retirement saving can always be put off till later, but boy, if I had a chance to start my Roth IRA 20 years earlier, I think I could probably even retire today. And you don't have to have a high yield ETF. I'm just doing it because I feel like I started a little bit late, and high yield dividend ETFs are giving me sort of a second chance to catch up and to hopefully not die poor. I don't aim to be rich, but I just don't want to have to worry about finance when I'm in my golden years. And I'm sure a lot of people can relate with me. Now, $300,000, which is my initial goal for the account, is not a lot of money to retire if you're in the States, but it could be a lot of money if you consider geographic arbitrage, meaning you live overseas in a country or a city that has a lower standard of living, something like Thailand or Vietnam might actually help stretch your retirement dollars. And the Roth IRA, yeah, it's for retirement, but not just to live off of, but maybe just to experience life. Let's say you worked hard your whole life and you want to do something fun in your retirement. Well, the Roth IRA can help fund your YOLO experiences. So to wrap up this video, I think people overestimate what they can do in a year, and people underestimate what they can do in 5 years. And I'm going to try this portfolio of 5 years. I hope you'll keep following me and follow how my portfolio grows or not grow. I hope it grows. And if you're interested in joining me, I challenge you to open up a Roth IRA, and we can be accountable partners, or just people who can support each other and cheerlead each other to reach our retirement benchmarks, or not benchmarks, goals. Okay. So every month I will post a video, and this will be the Roth to Financial Freedom series, episode 1. Next month will be episode 2, and I'll talk a little bit more about details about the funds, any progress, and any changes I may make to the portfolio. That said, thank you very much for spending time with me today. Good luck, take care, and see you in the next video.